The big difference when we're building portfolios is that we don't try to outguess the market based on our own opinion. Rather, we combine Nobel Prize-winning theory around the expected return of securities and decades worth of empirical analysis on actual returns. When you match these two things together, you can take a systematic, scientific approach to identifying securities that have higher expected returns by trusting market prices. So that enables us to build very broadly diversified portfolios that capture the return of markets and additionally overweight those securities that have higher expected returns based on the theory of how securities are priced and additional risks in the market. If you look at the track record of most investment managers when they try to outperform the market based on looking for mispricings, that hasn't worked out so well for investors or the managers themselves. This is because it's so hard to do, and there's cost involved in paying managers to undertake these activities. The good news for investors is that when you invest in capital markets, there's a return owed to you for parting with your capital and investing in securities. But when you pay people a lot of money to try and outguess markets, more often than not, investors haven't got those returns. The key reason why Dimensional chose to work with GYC is that there's a philosophical underpinning that's shared between both companies, and that is putting clients' best interests first. As one of the pioneers of fee-based advice in Singapore, GYC is getting paid by their client and acting as a fiduciary in a planning and investment management capacity. There's no conflict of interest between Dimensional, GYC, and end investors because there's no commission paid to anyone along the way. And so there's a natural fit between GYC's approach to financial planning and also investment management that lends itself well to Dimensional's style of investment management. Over the years, GYC has continued to be an important collaborator with Dimensional in helping us to launch new strategies. Not only were they the first people to invest in our UCITS funds in Singapore from the wealth management community, but they also helped us launch our sustainable equity and sustainable fixed income strategies in Singapore dollar currency. For that, we're very thankful. Unfortunately, the traditional model for consuming investment funds is that investment managers pay pretty big commissions to salespeople to sell them to investors. And at Dimensional, we think that investments should be bought and not sold. We work with GYC as a fee-based financial advisor because GYC is working for their client and being paid by their client. They don't need to be paid by the fund manager to sell those funds. We think that removes an inherent conflict of interest and leads to better outcomes when advisors are working for their client and being paid by their client to find the best solutions for them. And so that's why you don't see Dimensional advertised on billboards or on TV or other traditional media, because we don't need to do that. The people who invest with Dimensional know we're a good manager, and it's the kind of solution they're looking for their clients. The fact that we don't pay commissions is something that's rare in the industry and something we're very proud of. And I think it's a natural fit for advisors who are being paid by their client, working in their best interests.